Says global food prices are stable but still high. Do you agree? Or is the World Bank underestimating food inflation risks in 2013?
I kind of agree. I think if you look at Q3 this year, prices were more stable. I mean, it's kind of end of a rally that we see in the summer. But if you look at the report from the World Bank, they also say that now we're going to a new norm, which is called the high and volatile price. This is really what we see, and we agree on the Rabobank. I think price will have still a lot of volatility, a lot of high levels. That will be still a burden for consumer on food side.
Your 2013 outlook suggests that volatility in agri-commodity prices looks set to continue. What are the risks of a food crisis?
I think the risk for food crisis is lower. I think we don't have a panic on riot or very difficult situations. But what is important for investors is look at the timing. What we see in forecasts, I think Q1 we still see some increased price for grain and oilseed. But if you look at the end of the years, this same complex, I mean the wheat, corn, soybean will still move down and probably moving down to the level of 2011.
Which commodities should investors be best placed to invest in against the backdrop of global event risks?
I think one of the best outperformers should be palm oil. The reason for palm oil to be good is I think the inventory levels will decline slightly because of the seasonality productions. But also what's happening is palm oil price is still a discount to other edible oil. So they have some room to increase a bit the price and to support the demand.
Looking at your 12-month outlook for prices, palm oil and soy meal are at opposite ends of your bull and bear icons, with palm oil closer to the bull and soy meal closer to the bear. How come?
Well, the reason for the soy complex to move down in price is that there's two factors. The South America, I think what we see for the harvest from Argentina and Brazil is pretty good. So we see that they will have a better supply to be released for the trade, for the exports. And on the other side, we believe that the US will go back to a normal situations, with a normal drought situation. So all in all, this supporting price, that's why we see the soybean price moving down to a level, probably to a more decent price. On the other side, palm oil still have some upside opportunity, trading cheaper than overall regarding the complex.
What is your base case for pork prices in China, which affect the level of inflationary pressure in China? You've been predicting pork prices on the mainland to head higher in 2013.
True. I still predict some increase of pork price, but maybe later than we thought at the beginning. I think if you look at what's going on for Chinese New Year's, you have some price increase, but this is seasonal. What's going to happen, the most important, is the second half of the year. The inventory will go down, we will have shortage. That's still a uncertainty because we see some intervention from the government to maintain the level of soft inventory. We also see that the grain price will not increase that fast this year, probably, so that will help to release pressure on the price. But on the other side, cost of production for pork will still continue to increase, so some farmers will still need to pass on the price. So we still see some potential for increasing price for the second half of the year.